thing or the giveaway at the end. So
yeah, if you stay to the end, there's a giveaway. Don't forget. So if you can, then stay to the end.
Rain, oh, Porter. Nice to see you here. Brinley.
There's all the names. That's crazy for you.
Yeah. Rain. Got a lot. Join it. We're just putting names in for the giveaway. I think I got everyone. Ashley, Brinley, Jake.
Porter said not to put his name.
Porter, you're going in here 3 or 4 times. Don't worry. All right.
Okay, perfect. Yeah, I think we're probably good to get started. So I just want to thank everyone for coming. Hopefully this is good information for you. We're just kind of going to go over some questions you might have at the beginning of starting your home buying process, the first steps to take, some tips along the way. So yeah, it'll be awesome. But can everyone see my screen? If yes, okay, thank you. Okay, perfect. So first off, my name is Kylie Hawks. I'm a real estate agent with Cornerstone Real Estate. That's just the brokerage I work at. I was raised in Mountain Green, in Utah. I studied marketing at Utah State University, and I love to do anything outside interior design and food. So I don't know, real estate kind of fits in with that because we're doing stuff all the time. I'm outside a lot of the time, and also interior design obviously goes in with houses. So that's been super fun for me. But
yeah, I'm the loan officer. I work with Direct Rate Home Loans. We're local in Cottonwood Heights, Utah, and born and raised North Salt Lake, Utah. Went to Woods Cross High School, studied finance there and in college. Loved to golf, love to lift weights, go to the gym, shoot guns, fish, kind of be outside, be inside, same time. It's fun.
Okay, perfect. So reasons that a few of you might be here, these are just some common questions. So is buying a home even a realistic thing for me right now? How much do I actually need saved? Are interest rates supposed to go down, or should I just buy now? Can I actually afford a payment with my income? And where do I even start? So I don't know if any of you feel like that's kind of applicable to you right now, but we're going to go through some of these and hopefully get some of your questions answered. Okay, so I like to show this graph just because I want to emphasize that buying a house is a very big investment, but also that it is an appreciating asset. So as you can see, this is a trend from 1996. The median home price was $116,000. So that's kind of crazy. That seems super cheap, but over the years, it's constantly going up. And there may be a little dip here and there, but overall, the average of it is always going up. So when you buy a home, you're always going to be seeing that price increase. So home ownership benefits.
So building equity, this is a big one. Every payments help you own more of your home instead of paying a landlord. So that's the difference between owning a home and renting, of course. Renting, some people say it's just going in the trash, right? Kind of is, kind of isn't. It's different with every situation, but when you can get into a home, you're building long-term equity, long-term wealth, and sometimes you even walk in with instant equity, right? When you come under the appraisal value, which is awesome. And yeah, you have your stable monthly payments with a fixed rate loan. Your payment stays the same year after year, month after month. No surprises from your landlord, no year after year rent raise, and it's a lot less questions with your monthly payment. And the tax benefits, you have potential deductions for mortgage interest, property taxes. Every situation is different, but the tax benefits are there. Talk to me, talk to Kylie. We'll do a one-on-one with you guys and just see what potential deductions we could do for you. And a CPA, I would definitely recommend that too. And then home appreciation. Homes grow in value over time, building long-term wealth. Again, that's that kind of generational wealth, that wealth that you're building in regards to, or instead of rent, right? So
another great thing about home ownership is you have freedom to personalize. I don't know if any of you have noticed this with renting from landlords, is they don't always love for you to make changes to their properties. So if you're wanting to paint, if you're wanting to redo the kitchen or anything, you don't really have that freedom. So that's something super nice about your own home is you're able to do whatever you want to it. There's also greater stability. So when you are at your own home, you're kind of in control. So like this says, you don't have any rent hikes and worrying about a landlord selling. You don't have to worry about that because you basically are the landlord. So that's super nice. You're able to stay in one place. Community roots is also a great option. I know a lot of renters don't tend to stay in the same spot for a long period of time. And so when you're in a home, you usually are in one spot for longer. So you're able to grow those connections with your neighborhood and people around you.
So things to consider before buying a home. So big one, location, right? You want to know everything about where you're living. Sometimes we, get caught up in a home that we love, but we don't think about the location. You want to know kind of neighbors, sunsets, everything about schools, churches. I mean, anything that's important to you. Traffic, that's a big one for me. And yeah, how long do I plan on living here? So definitely you want to live there for at least a year. For most loans, especially if you're a first-time buyer, you want to live there for a year. It's kind of required. I mean, long-term wealth building, you definitely want to live there at least 3 to 5 years so you can actually make a return on your investment if you do plan to sell. And yeah, could I rent it out later if needed? Yes, absolutely you can. After you live there for a year, most loans, they allow you to rent it out. It just kind of depends on HOA or the city ordinances, things like that. I don't know if you have any other things to add for renting. Yeah, most of the time it's yes. So, and then, yeah, am I ready for responsibility? Your landlord is the big one. Landlord's not coming to save you. Me and Kyler were just talking about this one, and your water heater goes out.
Yeah.
You got the cold water for, a week or two or however long it takes. But thing is, this is on you. You're going to hire a plumber. You're going to hire someone else, do it yourself even. YouTube University, you can find anything, you can fix anything nowadays, or AI, same thing. And then am I choosing a home that I'll enjoy living in? Is this something that you're going to like long term? Do you see your family there? Do you see, when you're growing up, kids there? Are you going to enjoy the home? Are you going to enjoy what comes with the home? Downstairs, upstairs, pool, no pool? This is just something more long term that you got to kind of consider before jumping in, and just knowing what you want, right? But that's why we're here. This is why we're a team. This is why showings are a thing. You try before you buy. So
yeah, for sure. Okay, so currently in the market, I just wanted to give a quick overview of just kind of how the market is going right now in these different areas. I know there's a lot of other counties in Utah, but these are the 3 main ones near us. So in Cache County, this is a little bit more north, so towards Logan. The current active homes, there's 463 homes currently on the market. So if a home is active, that means it's listed and it's ready to be sold, but no one's bought it yet. No one's put in an offer yet, or at least it's not under contract yet. So these are all homes that are available to you pretty much. So you have 463 options in Cache County, pretty much. As well as Davis County, you have 838 options, and in Weber, you have 1,056 options. So you can see it's a little different from county to county. In Cache County, the median home price is $468,500. So that's what a home is selling for on average there. There's obviously a lot that are cheaper, and there's a lot that are more expensive. And then median days on market is 64. This means that when a home was listed, from the date it was listed until today, it usually sits there for about 64 days, so about 2 months. So that kind of just shows you how quickly things move. So it's important to look at that day as well when you're starting to look at homes. If you've seen that it's been on for only 2 days, then you might want to hurry and quickly put in an offer because there might be other people trying to do that. If it's sat for a little bit longer, then you might have a little more wiggle room on negotiation. So just a little something there. In Davis County, the median home price is $515,000, and then median days on market is 39. So those move a little faster in Davis than they do in Cache County. And then in Weber, the median home price is $428,750. So that's the cheapest out of all of these counties. And the median days on market is 42. So kind of in a middle ground of the other two counties. So it's kind of interesting to see how different the market is in different counties, but it's also important to realize how quickly things are moving, what they're usually selling for, and how many there are on the market.
Sweet. Let's talk about loan options. You got a bunch here. I know it's a lot. We're going to run through them. You're going to see your top four kind of for first-time home buyers. These are going to be your main ones. We have some honorable mentions down below. We'll talk about those. Conventional, though, this is definitely your main, maybe FHA, but conventional. This is for those buyers with good credit. Down payment as a first-time buyer, you can go as low as 3%. Normally it's 5%. So 3%, that's, thousands. Awesome. And the monthly extra you have here, that's your private mortgage insurance. So this is monthly mortgage insurance, and that's if your down payment's less than 20%. But the best part is you get to keep it long term. The mortgage insurance drops off after you have that 20% in equity. It just automatically drops off of your loan. So you're saving a few $100 a month. Just kind of depends what your mortgage insurance cost looks like. It's very buyer specific. So that's something we can help with there and get you those numbers. And then, why you should like it, just lowest long-term cost if your credit's strong and you keep the home. We like to see credit scores above 700 to do a conventional, because when you see the credit score below 700, you're kind of getting dinged with points, and your interest rate, it just costs more. So that's when we go over to FHA, buyers with lower credit or smaller savings even. So down payment as low as 3.5%. You do have mortgage insurance premium. So this is also monthly, but this actually stays on until you sell or refinance out of that FHA loan. So there's no, I have 20% equity, can this drop off? No, that monthly insurance is with you every single month. Still a very, very good option. It's easier to qualify, get approved. Typically it is a lower payment. We usually see about $100 to $200 less than a conventional loan with kind of the same down payment there. But if your credit's not great, FHA can help. Right now we're seeing, below 5.5% for FHA for interest rates. So it's a really good option. VA, for all the veterans out there, appreciate your service. And this is a great option for everyone who's a veteran. So service members, veterans, surviving spouses, those are the three mains to qualify for a VA loan. And this is why they're great. Down payment, you have 0% down. Your monthly extra, there's zero mortgage insurance whatsoever. So that's amazing. There is a VA funding fee, and that's either upfront or it's added to your loan. You actually get a pick. And when it's added to your loan, it's just added to that extra loan amount. So it's only like a $20, $30 difference when, it's amortized over 30 years. So, but there is no fee if the VA says you're exempt. So that kind of depends case by case basis. But yes, this is often the lowest payment, best terms for those who served. So definitely start there. And now we're going to talk about kind of a big one, down payment assistance. So this is government help for $0 down and your closing costs. So the only thing is just income and price caps here. It varies, medium area income. And that's something, again, we look at and we'll tell you if you qualify. It is pretty easy to qualify for here in the state of Utah. So it's great. So your down payment, you can have $0 down, zero closing costs. Your monthly extra is your private mortgage insurance or that mortgage insurance premium, depending on the FHA or if we went conventional. Most of these are going to be FHA because you're going to see a lot lower of an interest rate. But yeah, that's the monthly extra there. And then the note here, so 6% of the purchase price can be used for your down payment and closing costs. So yeah, you have a $500 loan or $500,000 loan, you take that 6% and then you delegate it to your closing costs and then your down payment there. And that's actually a second mortgage added to your monthly principal, interest, taxes, and insurance. So your monthly mortgage payment plus insurance and taxes, essentially. But yeah, why you should like it, $0 down, zero closing costs, nothing up front. You're in for a home, right? Easy as that. So really, really great option. We see this a lot for Utah buyers. And we're going to go into honorable mentions, just kind of touch on these. Bank statement loans, another great option. So these are self-employed borrowers who sometimes file taxes, write a lot of things off, can't use taxes. Bank statements, great option. 12 to 24 months of bank statements, 20% down, kind of higher rates. No mortgage insurance there. Jumbo for prices above conforming loan limits. This is good credit and you want reserves needed, kind of higher down payment as well for jumbo loans, typically above 20%. USDA, it's another great option if you're buying a rural property. Eligible rural areas, you have $0 down. So those are income limits as well. That's a great option for a lot of our borrowers, buyers. And last one, DSCR. I know this is a lot. DSCR is so this is really no income docs. You qualify on the verified rent versus the mortgage payment. So there's no income docs needed. We have an appraiser go in there, schedule a rent schedule, and he analyzes the whole property, sees what it's going to rent for, and then that's your mortgage payment. And that's how you qualify. So there are those loan options for you.
Lots of great ones. And I love these because I feel like in any situation that you're in, you can find a loan that really fits what you need. So yeah, anyways, I'm glad that there's so many options because there's so many different scenarios out there.
100%. Yeah. First time buyer options as well. So this is the perks you have as a first time home buyer. So you do get better interest rates. As a first time buyer, there's something that we can submit and it's kind of proof of not owning a home. And then you get a better interest rate, a little bit better pricing on your interest rate. Only 3% down. We just spoke about that. Normally conventional is 5% down. As a first time home buyer, you're getting 3% down. So better deal there and just less, money up front to go into your home. Down payment, closing cost, assistance program. So another, just what we talked about there, you get your down payment covered, closing costs covered, and you walk in with pretty much nothing out of your pocket. And then lower PMI with the Home Ready and Home Possible programs. So those are conventional programs there. And those are case by case basis, but typically lower PMI. And yeah, as a first time home buyer, kind of depending on credit, but again, great time being a first time home buyer. So great.
Just gonna make sure I'll pass the ones to.
Sweet. And then we are going to talk some real world numbers for you guys. This is a listing that Kylie's one of her agents in her brokerage has.
Yes.
So if you're interested, you know who to go to. But yeah, this is a $334,900 purchase price. So everything's based off that purchase price. So FHA, your minimum down is 3.5%. That's the $11,000 there. And then today's interest rate got about 5.625%. Your monthly mortgage insurance, that's that 0.55% each month, and that's $147 per month. And then your monthly, so that PITI is principal, interest, taxes, and insurance. So your monthly or mortgage, $2,245 per month. And then we're gonna go down payment assistance. So 3% down. You got the $10,000, $47. And again, that's going to be that's covered. So that's going to be your second loan underneath that. So you're not walking in with any cash out of pocket. Their interest rate is 6.125%. And then you have that monthly mortgage insurance, $157 per month. Your monthly second mortgage, $135 per month. So all that wrapped together, $2,471 per month. And you kind of see the difference there already with the FHA and the down payment assistance program. But it's not much, only about $220. So conventional, minimum down 3%. This is going to be $10,047 upfront for your down payment. And then today's interest rate, 6.250%. That's what we pulled up today. And then your monthly mortgage insurance, $157 per month. And then your monthly estimated mortgage there, $2,362 per month. And just to touch on I was going to touch on the monthly mortgage insurance. They are different from the FHA if you go conventional, just because of credit score. With credit score, you're not going to be affected as much. On FHA, conventional, you will be a little bit. So just case by case. But VA, this is definitely the best one. $0 down, 5.875 for your interest rates. Your funding fee, 2.15%. So that's that $7,200 that's wrapped into your loan. And then your monthly mortgage insurance, $0 per month. And then, that comes down to the $2,228 per month. So VA would be your winner here for the lowest mortgage. But if you're interested, get Kylie here and go buy this house.
Yeah, we can go look at it, or I'll send you some more pictures or something. But so thanks for doing that breakdown. I think that's super helpful to see the differences.
Okay.
Okay, so the average timeline, we recommend that the first step you do when you're kind of getting it ready to purchase a home or start looking for a home is actually to get pre-approved. And Nick is the one that would help you do that. Basically, it's just submitting all of your documents, all of your income, all of your debt, and they are going to tell you how much they will approve you for in a loan. So they'll basically tell you how much you can afford, like how big of a house you can afford. Did I explain that pretty good?
Oh yeah, perfect.
Okay.
Perfect. Spot on.
Yeah, so getting pre-approved, it can be done fairly quickly.
Yeah, I like 5 minutes. As long as we get all your docs in, we like to verify income. So docs in pretty quick, then 5 minutes, 10 minutes after that. So
yeah, so it's pretty quick. On here I have sometimes it takes 1 to 3 days, just because sometimes it's hard to get your documents together in one day. And so, it could take anywhere from 1 to 3 days.
100%.
Once you get pre-approved, then you'll talk to Nick and probably myself, and you'll set a budget. This is something you can do personally, obviously, but then if you also want our advice on how much of your income you want to be spending on a mortgage, we can also help you with that. But setting your budget is very important, because it's so heartbreaking if you go into a home and you fall in love and you realize that it's $100,000 more than you can afford. So we really like to get that step done at the beginning, so that you know exactly what to look for when you're starting your home search. So once your budget is set, you're going to then start your home search. It could be the first house you look at. It could be the 50th house you look at. You don't really know. So it's really up to you and whatever comes on the market and whatever is going to fit your needs and wants the best. Once you find a home that you love, then I would help you make an offer. Negotiations can sometimes make this a longer process than a day, just because sometimes you go back and forth on price or on different deadlines or different things with that. So making an offer usually about 1 to 3 days. Once you're under contract, then we're going to start doing your inspections. You'll have an appraiser come, make sure that the house is being sold for a good price, and then final loan approval. That is something that Nick again would take care of, and just make sure that everything's good to go there. And then at the very end, that's when you'll fund and you'll have closing day. This is typically about 30 to 45 days after offer acceptance. I've seen it be 3 months out. I've seen it be 2 weeks out. So again, however is best for the seller and for the buyer. So it really differentiates. So as far as the offer goes, there's a few things that we will talk about when you decide to make an offer. So obviously the price, how much you want to pay for the home. Earnest money deposit, this is like a good faith deposit. So it's usually about $1,500 to $2,000 that you're going to submit at the beginning, so within 4 days after going under contract. And it's basically just proving to the sellers that you're serious about it. This money will most likely go towards your down payment in the end. And so you're not losing this money. It's just kind of like a little deposit you're putting down at the beginning. If you decide to back out of your deal before certain deadlines, you can get that money back. So it's not like you're going to lose it. It's just to show that you're serious. And then financing, we'll obviously have to talk about how much you want to put down on the home, what loan type you want to do, and all the different financing there. Contingencies. So this is, like I was saying, you could back out before some of these things. So if something goes wrong in the inspection and you find out that you're going to have to spend $50,000 to fix something and you're like, that's way too much for me, we can back out and be free and clear, get your earnest money back. So it's good to put those contingencies in just to make sure you're getting the best bang for your buck. And then inclusions and exclusions. Each house is different. Sometimes they will leave the fridge. Sometimes they'll take the fridge, or sometimes they'll leave the trampoline. Sometimes they won't. So this is where we kind of decide, is there anything you want to ask for that's in the home, or are you good just with how it's going to be, how they offered it? And then closing timeline, we'll also talk about the different dates that you want. So if you want to close in 45 days, we'll make sure to put that. If you want to close quicker, then we'll put that. So just some things to consider.
Sweet. So we're going to talk about improving your credit. So here's some tips. Actually, you want to start?
Sure. Yeah. So the number one tip we have is just keep credit card utilization under 20%. This is kind of a universal rule, I think, for every credit card. So
sure.
Even if you have $3,000 you can spend, don't try to spend that $3,000. Try to keep it under 20% of $3,000. And then always pay your bills on time. Another huge one. I personally, when I buy something on my credit card, I like to immediately transfer the funds over just so that I don't forget, because sometimes you get to the end of the month and you're like, crap, I have this huge credit card bill I need to pay. So yeah, that's just another tip. And then keeping your accounts open and active. So don't close out your old cards, actually also improves your credit.
Yeah. And avoid applying for multiple new credit lines at once. So yeah, I mean, that's a big one. And I'm sure you guys know that as well. Just kind of keep credit lines lower there and not so frequent. Pay down your balances a few days before the statement date. So before, your statement's posted and it's due, pay down your balance just a few days beforehand. Trade lines like to see that. And another one, this is very special, is what I help out with too. So if you have low credit scores, Kickoff, their credit building platform, awesome. Couldn't recommend them enough. That's what I use when I help clients out with building their credit, because that's something else I do. If they're going to close with us, that's something we do for free. And Kickoff is one of the major factors there. If your score is pretty low, if it's 650, if you want to just get above 700, I would recommend them 100%. Just a quick thing before going off the credit screen here, just kind of what they do. So they give you a credit line of $3,500, and then you pay $5 per month. You don't have any access to actually use that, that $3,500. You're just giving them $5 a month, and it's paying that $3,500 at a utilization of, like 0.5%. So they're huge. They're awesome. If you want more info, we can talk about that later on.
Yeah. Perfect. Okay, and then house hacking. This is something I was excited to talk about just because buying a house is overwhelming. It seems like it's so expensive and it's so out of reach, but there are so many ways for you to get in a home where you're not spending loads and loads of money. So the first one is to buy a duplex or a home with a basement apartment. The reason this is so good is because you can live in one area and rent out the other. So I actually just helped some clients of mine buy a duplex in Ogden about a month ago, and they were able to get pre-approved for more money because it was a duplex. So because they were planning on renting out the other side to a friend, they were able to purchase a larger house. So that's a great option to house hack. Another one is to get a fixer-upper. Those are usually priced lower because the sellers realize that there's a lot of work that needs to be done to them. And so if you buy a fixer-upper, you're building equity, you're creating value, even if you just put a little bit of money into it. So that's always a great option. Another great option is to use grants or programs like Own in Ogden. There's a couple of these in different cities, but I know this one specifically. There's a lot of houses that qualify for this Own in Ogden. It's a grant, so it's not a loan. You don't have to pay it back. It's just money that they give you. So that's a great one. Another one is rent out extra bedrooms to roommates. So even if it's not a duplex that has a separate apartment, you can even just rent out bedrooms. Trying short-term rentals like Airbnb, VRBO, if allowed. Again, maybe with a separate room or separate apartment. And then also add or use an ADU, a casita, garage apartment, or tiny home. An ADU is an additional dwelling unit. And so it's basically like a duplex, but it's either a casita, garage apartment, or tiny home. So it's kind of more separate. So those are just a couple ways of house hacking that you can do. Okay, and then I didn't want to leave this presentation without giving you guys first steps because I know we covered a lot of information. There's a ton out there. We'll be giving you copies to these slides too, so you can go back and review it. But the number one step I would do is just start budgeting and coming up with your needs and wants list. So if you know that you really need to have 3 bedrooms or you really need to have a garage, just kind of start keeping those in mind. So when you're ready to start the home search, you know what to do. And then the second step, I don't know if you want to talk about that one.
Yeah. I'm the lender.
Meet with the lender.
Hi guys. Yeah, meet with me, create a plan. We're gonna go over your monthly budget, your goals. We're gonna strategize on what you guys want, what your budget is, and make sure this is something you're comfortable with and happy with, and you're ready to make these payments and still be able to live life, right? You're not just stuck in the house payments. So yeah, we're going to create a plan. We're going to strategize with you guys. And then get pre-approved and talk to a realtor. Here we go. Back to
exactly. So once we come up with all of your plans and really make a custom plan for what fits your needs, then we will start talking about looking at homes in different areas, and we'll start looking online and going and seeing those homes in person, which is such a fun part of the experience because you really learn even more what you want and what you need. So now we wanted to kind of open it up for questions. If anyone has any, you can either put them in the chat, I'll look there, but also if you want to just unmute, that works too.
What would you say the average closing costs would be on, I don't know, I guess just average houses?
Mm-hmm.
Yeah, I would say so. Average houses just kind of depends on which title you use too, but average would be 6,000 to 9,000. I would say that's kind of what we're seeing right now, like $500,000 house.
Yeah,
you kind of say.
I would say so. Yeah, I think. I mean, another nice thing about closing costs right now is the market that we're in. I've been seeing a ton of buyers get their closing costs paid for by sellers. So there's a lot of buyers out there where when you're writing the offer, that's another thing you can negotiate. You can ask for money for closing costs. So that just makes it so you don't have to bring as much money in. All you're bringing in is your down payment. So that's something super helpful I've seen recently as well. Okay, here's one in the chat. My husband and I are looking to buy a duplex, but most of the options near us are very old houses, like 100 years old. What advice would you give about buying an old home? Anything we should be weary of? That is a very, very good question. So old homes are amazing. They come with character, but they also come with different quirks. So I think when you're looking at old homes, definitely ask about those major expenses like water heaters, roofs, AC, furnace, those kind of bigger ticket items, and see if they've been replaced soon. So I think as long as people have kept up with that and really replaced those big things, and I think that older homes are great, and they have good bones usually. Another nice thing with that is when you put an offer in on a home, you have something called a due diligence timeline. So you'll usually have about 2 weeks where you can inspect the home. And again, like I said, with the earnest money, if you find something wrong with the home, we can just back out and it's not a big deal. So you get your earnest money back and all that. So that's what I would say. Anything else you would add?
I thought that was great.
Okay.
I thought that was perfect. I totally agree. And yeah, old homes are awesome. So
yeah.
Heck yeah. Did we answer that, Lindsay? I hope so.
Yeah, was that a good answer? Yep.
Yeah.
Okay. Awesome. You're welcome. Any other questions?
Yeah, I got another one.
Okay.
For a timeline wise, I know you went over that a little bit earlier, but how soon in advance would you recommend starting the search, starting the process? So if you've already signed the lease, say expires, let's say end of June of next year, when would you recommend starting the process? Would it make sense to start it now or closer to that date?
That's a great question. I would say, on average, some people take like 3 months to find a home, but I would also consider how expensive it would be to get out of your lease if you could. Like if you started it right now and the perfect home came up, would you be willing to get out of your lease for that home? But then also, if it's not something you're able to do, then I would probably wait a little bit longer till you're a little closer to the end of your lease. So probably about 3 to 4 months before, and then I'd start talking about getting pre-approved.
Yeah,
Would you-
100%. Yeah.
Okay.
Well, yeah, and that's that's a great thing too, because pre-approval, we do a softball on your credit. So we see your liabilities, we see everything that we can do to help. We see your credit score, of course. It's a softball, but it's pretty dang accurate. So we help you. Well, at least me, I help on credit scores and boosting your credit. I want to get you the best terms, the best rates, interest rates, and in doing that, we want to get your score above 700 usually. But they are tiered. Pricing's tiered with credit score. So every 20 points in your credit score is a price change in your interest rate, if that kind of makes sense. I know it's kind of more complex, but honestly, the sooner you can get pre-approved, the sooner we can help, the sooner we can work with you, whether that's credit score, whether that's budgeting, whether that's showing you if you want to do a down payment assistance program, or if you want to do conventional, start saving up money, save up money for more down payment, and just kind of show you every different payment that, you could do. So
Yeah. Yeah. I do think it's good to get ahead of at least the budgeting side of it. Like
Yeah.
if you know you want to buy in June of next year and you just want some advice on like, this is kind of what we make a year. This is kind of the debt that we have right now. What should we do right now to start improving that so we can get to a higher like a higher purchase price? Then I think, yeah,
100%.
you could probably start as early as now. But as far as like the searching for a house part, I would probably wait a little bit more. So
Sweet.
did that answer your question, Joel? Okay. Looks like we have another one in the comments. Out of those 3 counties we saw earlier, is there one that is known to offer more land? Buying a home with land is important to us. What locations offer the most acreage? I would say the most acreage you're going to find is away from large cities. So I would say Cache County has some good land. Weber County has some good land. Davis, I feel like, is a little bit more limited on land. But again, those aren't the only 3 counties. So like if you go out to Tooele, if you go to Tremonton, there's more land. So it really is just different locations and you can pretty much find land. But yeah, it's kind of, we'd have to look a little bit deeper into that. So I think there's a little bit of land in most places. That probably doesn't really answer the question, but yeah, I'll have to look at that a little bit closer. Okay, so we have, do you know the difference in buying land and building a house or buying an already built home with loans and interest? Do you have an answer to that?
Yeah. So buying the land. Okay. So yeah. So with just starting out buying land and then, building a custom home, that sounds like what you're referring to. So there's a construction loan. It's called a construction of permanent. So you pretty much, you can loan the land, you can get a mortgage on the land, and then it bridges over to a construction loan that's permanent. And that's for your construction of your new house on top of the land. Those are great, awesome mortgages there. Or you can do a just temporary kind of loan. It's kind of harder to explain, but it's just for the land. And then once you actually do want to move forward in building and constructing your home, then you get a permanent 30-year fixed conventional. It just bridges over onto that. One's permanent, one's temporary to start, and then turns into permanent, if that kind of makes sense. And then an already built home with loans and interest. I mean, that's, you're not paying, I don't know, would you say you're paying for the land when you're just buying a home that's just there? I mean, you are, but
I mean, a little bit, but
kind of wrapped into it.
Yeah.
But I feel like constructing is kind of more custom.
Yeah.
That'd be a really good question if you kind of had a quote for, I know, and we could compare the two a little bit more, like, monthly by monthly. But I will say with the interest rates on a construction, you typically see maybe a little bit higher. But it just depends. You never know. That's why we're here. We're here to help. But I hope that kind of helps, Layla.
Yeah, I would guess that a already built home is probably going to be a little bit cheaper than
I agree.
buying the land and then also building a home with a construction loan.
Yeah. Yeah.
So I guess it depends on how much work you want to do yourself as well. So I don't know.
Yeah.
But yeah, we could compare that if needed.
Heck yeah. No
Okay.
problem.
Any other questions?
Put the names in. I'm gonna get these going.
I've got a question. What things should we budget for on top of just like closing costs and things like what other things should we be budgeting for in preparation?
Yeah. Yeah, I mean, we could talk about out-of-pocket costs before like these will most likely be out of pocket is your inspection, your appraisal, but that's when you're under contract, buying the home. And appraisal is typically like $590, $550. And then what's your inspection?
Inspection is usually around $400 to $500. It kind of depends on the size of the house too. So yeah, probably about $400 to $500, and then add the appraisal, and then right off the bat, you'd have to do that earnest money too. So just making sure you have that money ready to be transferred or written in a check or something. And then your down payment.
Down payment. Yep. Down payment, unless you want to do down payment assistance, but down payment, 100%. I would always recommend, if you can, definitely save for one. I would always recommend that. And I don't know. I mean, it's pretty.
I think
pretty
that's
much it.
Yeah. Inspection, appraisal, down payment, closing costs.
Yeah.
Yeah.
Just upfront. Yeah.
I'd say those are the four.
So, and I guess furniture, if you want to. Yeah, I forgot. You want to if you don't have furniture, or you want a brand new set or brand new dining set, whatever. That's also another thing we see. So, but that's aside the mortgage stuff, and yeah.
Okay, we had another question. I have a question. What do you do if an appraiser finds that the home should be cheaper or more expensive? Is that a major pivot? So it kind of depends on which situation you're in. If you're the seller, you want it to come in at value or lower. If you're the buyer, you want it to come in at value or a little bit higher even. So if it comes in at value, that's perfect. Everything's great. If it comes in higher or lower, the only pivot that you would make is just, you might have a little bit more negotiating on the price. So the seller might ask for a little bit more money, or you might ask them to lower the price a little bit. So it's not a major pivot, I would say. It just goes into adding an addendum to your contract and just maybe adjusting the price a little bit.
And if the sellers don't, and you just walk in with all this equity.
With a bunch of equity,
yeah.
I've had a few buyers who went under contract and then it did come in a little bit higher, and the sellers, like, obviously we wanted it to be that way because we paid $500,000, it came in $550, and so they walked in with $50,000 equity. That was an example, but it was like at least $25,000 equity. So
nice.
It could be a really great thing. So just a little bit more negotiating.
Heck yeah. Heck yeah. Thank you, Jake.
Okay. Any other questions?
We get this giveaway.
Yeah, I think we're gonna do the giveaway then.
Uh-oh.
If you guys have any other questions too, you can drop them in the chat and we'll answer them right after the giveaway. So Nick has a spinning wheel over here. Everyone that stayed to the end, I don't know if you can even
we'll show you
show
guys
it on here.
just so you know. It's probably reversed,
It might be.
but let me double check. I want to make sure everyone's on here. All right.
Yeah. And I think Rain had to leave, so you can take her off.
Rain. Come on. Okay.
Perfect.
Sweet. Okay. We're gonna let you guys do it. Ready, set, go.
Where's the
Boom. Spinning. I don't know if they can even see, but
I think so.
I don't know if it's reversed. What we got?
Lindsay, it looks like. Awesome. Okay, so
Very nice.
thank you all for staying to the end. We just wanted to do a little giveaway to say thank you for coming. And so the giveaway is going to be a Minky blanket with some mugs for the holidays. So Lindsay will have to message you and figure out how we can get that to you. But at the very last thing, let me just do this next page. If you guys have any other questions or anything, here's our information. There's Lindsay, woohoo. Here's our information, phone number, email, Instagram, if you guys need anything. And then we also wanted to mention, I forgot our last thing.
Oh yeah.
So we wanted to talk about, if you guys want to move forward and you want to talk about any of these things with Nick and I, you can schedule a one-on-one and we'd love to do a call with you just to go over your situation. And then we also wanted to offer you $1,000 if you close with us. That will come off of your closing costs or money you have to bring. So just as a little extra incentive, if you guys do want to move forward, then you can schedule a call with us and then we can work out that incentive. So if you guys don't have any other questions, and I think that is it for our call.
Thank you guys so much for joining.
Yes,
It's
thank
super
you.
fun having you, and we hope to hear from you.
Yep.
Thank you.
Much.
Of course.
Thank you.
See y'all.
See ya.